The stock market and the housing market are going to crash. We're going to talk about how to prepare for it in this video and how soon you can expect it. So stick around. It should be a great video.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
If you're like me, you've been listening to these guys on YouTube talk about the housing market crash and the stock market crash and the economy that's coming for the past 4 or 5 years. And they still haven't been correct. So when will they be correct? The real answer is I have no idea. But you know what? One day they will be. And when that is, there's really no way to tell. You can't let them scare you out of investing and saving for your future. That's my advice. Stop listening to these guys. In fact, in some ways, stop listening to me outside of you enjoy the content, you see it as entertainment, you think maybe I have some good insight. But the guys who are constantly talking about disaster are doing one of two things. Either they see that it works for clicks and people watching their videos, or they're just so negative they don't see any of the positive out there. You have to see what's going on because we're all aware of all the negative. We still have two wars going on. We still have inflation. The government spent a ton of money. It has printed tons of dollars. There's so many things going on, but that is all priced into the market. In fact, I think this last correction that we saw the past few weeks is probably about as much of a scare that we're going to get for this year, and I'm calling for new highs within the next 6 months. So let's start with the debt and the fiat currency conversation and how the government continues to print more and more money. Now, I'm going to date myself a little bit, but I was born in 1972 and I grew up in New York. I remember going into the city and my parents pointing, and I don't know what building it was anymore, at this building that used to have this number go round and round in circles. And you could see the number on the building was consistently getting higher and higher at a rather rapid pace. What was that number? That was the debt that we had back then in the early 1980s. Well, we're in 2025, and I remember my parents talking about our debt and how big a problem it was and how it's going to get worse and how we're going to address it. Now, forgive me for being naive because the debt has grown immensely, but it is the same conversation 45 years later about the debt. I don't understand how it doesn't seem to be a big deal. I don't understand how we continue to get more and more of it, but we're so interrelated with every other country that in some realm it doesn't even matter. Sure, we have inflation. That's a separate issue that we'll get into. But the debt is just something that the government manages by the amount of bonds they sell and the interest they pay and how much they're spending. And really, if we wanted to deal with it, the best way to deal with it is be more careful about the spending, which gets people up in arms because that's what DOGE or Doge or Doji or however you pronounce it is working on, and people have a fit because they think that they're going too far. Now, if you're trying to fix the spending in a company or a country or anything else, it's going to have problems, and people who are good employees are going to lose jobs, and you're going to see things bad happen along the way. But you have to hope for an overall good, and you can't be yelling and screaming going through the pain to get to the end where the hopeful solution is a good one. And maybe it isn't. I'm not picking a side here. I'm not saying I like this one or that one. But you have to hope that the people doing the things that they're doing are doing it because they think that's what's best and not some underhanded reason. It might be incorrect. Maybe there is an underhanded reason, but you really have to hope for the best and not be negative all the time. Either way, the debt was not an issue back in the late 70s, early 80s, and it still isn't today. If they had that building and the numbers were still going around in circles, it would be the same exact thing, and the numbers would be going faster and faster. And just like my parents were telling me about it, I would now be telling my son about it. Don't worry about it. And I'm not saying ignore all the macroeconomical things going on. What I'm saying is it's already priced into the stocks. You have to relax. It's better to save for your future than let these guys scare you out of not saving. The inflation is out of control. Oh my God, my pee or my nipples, thank you, dividends with cheese, because I think you're so funny, are getting hard, or whatever he would say that would be real funny there. That I don't have that sense of humor, even though I do. I just don't think of it when I'm doing these videos. The inflation, same thing, same conversation. I am old at this point, and I have been listening to it since I was a kid. And I like to eat. So let's talk about candy bars. We could talk about a slice of pizza too, because that's something I remember. When I was a kid, I remember it being less than 25 cents. They were somewhere around 15 cents for what was my favorite at the time, a Snickers bar. I remember them getting to a quarter. And then when they pushed through a quarter, because it was the first time I could go in with one, coin, 35 cents. Then it shot up to 50 cents. And the next thing you know, they were at a dollar pretty quickly. And then for the next like 20 years, it really didn't change until recently. But if you average it over time, there's been inflation all the way through, and it's come through in different products. Some things have consistently gone higher, and some things have had spikes and peaks and valleys. And then when you get into things like coffee, where they're reliant on the coffee bean that has its ups and downs, you see these things ebb and flow, get more expensive, back off, but in the long run, there tends to be inflation. Things get more expensive over time. And you can interrelate it to the printing of dollars and say that it's your dollar getting weaker, because if you compare it to other things, like Peter Schiff likes to compare it to gold, generally the same amount of gold can buy the same amount of the product while your dollar gets weaker, but that is kind of how inflation works. The inflation slowing that the Fed is trying to do does not mean deflation. That does not mean that things are going to go back to the prices of what it was before COVID. Because we saw a nice big spike. Everybody's upset about it. I totally understand. I don't like it either. I hate going to dinner and getting sticker shock. At the same time, it is going to continue. And instead of getting angry and expecting some big crash because nobody can afford it, that isn't really true. Everybody can afford it. They've just learned how to deal with it, and they just bitch about it because they don't like it. It doesn't mean that they're not going on vacations or they're not buying the eggs if they need eggs. They still get the things that they need. They just complain to you that it's too expensive and they can't afford it. Like, honestly, if you really look around, has anybody had to make any dramatic changes to their lives because of the prices going up, or have they just complained that they can't afford the higher prices? Which is it? Tell me in the comments. I'd be really curious, because what I see is people just complaining how expensive it is, but I still see people going to dinner. When I go down to the casino every blue moon, I see they're jam packed. At the restaurants, they seem busy. We just went to Mexico City. Everything seems to be thriving. It does not seem slow. The airports were packed. So, despite the inflation, my eyes are telling me people are still going out and doing things. And then when you look at earnings and demand, things like the Carnival Cruise Lines and Royal Caribbeans, they have demand for the next couple of years for the cruises. So, uh, is the inflation destroying their business, or is it simply just making things more expensive? I say the latter. It's just making things more expensive and not killing business. The consumer debt is killing us. Credit cards are at the highest level they've ever been in years. Okay, think about it for a minute. Don't you think if we've had inflation and things cost more than they used to, that your credit card bill would be bigger, not smaller? If prices are going higher and you're buying eggs 6 months ago and you're buying eggs today and you used your credit card both times, don't you think you're going to have more credit card debt? Whether you pay it off every month or you make payments, either way, if the things you're buying are more expensive, obviously the amount of money being charged on credit cards are going to be higher. Now, as long as the default rate isn't going through the roof and people aren't losing their jobs, and you're just seeing normal ebb and flow with bigger numbers, it goes along the same as the inflation, goes along the same as the government printing too many dollars, And it goes along the same with everything else. So, yes, credit card debt is higher than it's ever been, but that should be expected. That shouldn't be something to panic about or even note unless you're noting that we've had inflation and it makes perfect sense. Now, if somebody wanted to do a comparison to how much inflation we've had versus how much the credit card debt has gone up and see if they correlate or if there's this big, digression from them and that it doesn't make sense because we haven't had as much inflation as the credit card debt, that at least I'd respect the conversation. But all these conversations pointing to how many billions or trillions of dollars in credit card debt we're at now and having no real fundamental basis as to if it matters or not is just silly. So, one other thing to stop worrying about and continue to put away and save for your future. The tariffs. Oh my God, the tariffs. People already can't afford things. And now we're going to have these tariffs making things even less affordable. We're going to have a recession. The economy is going to crash. Relax. Really. So far, it's been pretty much nothing other than news noise. And I think it's created an opportunity since the stocks pulled back because of all that. I see it as the best opportunity we've had in a while. Before the tariffs, if you wanted to buy Amazon, for example, it was trading above $240 a share. When they started talking about the tariffs, it fell to about $190 a share. Well, would you rather buy Amazon at $240 or $190? So why is everybody running for the door at $190 and perfectly happy buying it at 240? Take a breath, relax. If you're saving for the long term, be happy that the stocks came down. In fact, if your job is secure, you should hope that there's an actual collapse and you can buy things even cheaper. In the meantime, don't stress. The tariffs haven't really affected anything. I haven't even seen that any of them have actually got implemented. And there's this big drop dead date on the 2nd that we'll see if anything happens and what if it is from there. And then from there, I would still wait to see how that impacts pricing and does it even slow things down. And I wouldn't stress about it because now they've priced that correction in. So if it's not as bad as people expected, this could end up really good for some of these companies. It even allows them to be able to raise prices because I see it in the comments. Everybody blames the tariffs now when they see a price go up. Oh, it's because of the tariff. Well, maybe, maybe not. But I bet they're still buying that product and just complaining about it. Don't buy a house. It is more unaffordable than ever. You shouldn't do it. Well, maybe, maybe not. Same thing. I, I understand prices have gone up. I understand interest rates have gone up. But if you want a house and you can easily afford the payments and you've prepared for the air conditioner might break and whatever else, my guess is, like the past however many years, you'll see house prices continue to drift higher. The reason I think that is every time I see somebody start looking, they get cold feet, they don't buy, and 3 or 4 months later, they're sitting there kicking themselves because now prices are even higher and now they're surely not going to buy. That's typically how markets work. When everybody starts rushing in because it's just going higher and they're all positive that they're going to make millions of dollars, that's when markets are usually done going higher. But in the meantime, when people are legitimately nervous and don't buy because it can't go any higher, yet it continues to go higher, that can go on for a long time and a lot longer than people think. In fact, I did another video kind of talking about why this time will be different than last time when we talked a lot about the option arm loan product and how that impacted things back in 2008 and that it's not even an option anymore. You can't offer those loans at this point. And that makes it completely different. As opposed to having people with uh, loan products that are going to season and change into a higher payment, you now have people locked in at sub 3% and even sub 4%. I guess I said that backwards. Interest rates that really aren't going to go anywhere because they have such a good deal and they see that as an actual value in a product they don't want to lose, meaning the loan. If you have a loan at 3.25%, you really want to hold on to that for dear life. So that's why you're seeing a lack of inventory come to the market, because nobody wants to let go of those really low interest rates. In fact, when it came around, I even said to my wife, forgive me for patting myself on the back, like, I see this as a once in a lifetime opportunity that kids in 40 or 50 years are going to be reading about. Well, they probably won't have textbooks anymore, but they're going to be reading about COVID and the interest rates being bought down and how lucky people were to be able to get into that great opportunity. And I still really believe that. Like, I feel like when my son is graduating out of college and I'm talking about our mortgage and our house payment, he'll just be in shock that that was even something that could be done, and amazed that not everybody jumped into it. But I also think that's why you don't see the inventory. And the underlying thing for any economic product is supply and demand. So if there isn't enough supply and there's still demand because people are working, things tend to go up in that situation, even if they're already expensive. I expect to see it continue and at some point start to spike again, which is when you'll see everybody run in because they're just going to figure it's going to keep going. And then, yeah, maybe we might have a correction. In the meantime, I see it continuing to drift higher. Now, as always, because I don't want to forget this, and since I said that stuff about the housing before people delve in and just buy a house, please, this is not financial advice. You shouldn't listen to me. You need to reach out to your financial advisor for making any financial decision you're making. I am just a guy on YouTube sharing what I think and what I see in the markets. It doesn't mean I'm accurate, and really, you shouldn't listen to anybody else. But part of what prompted the video was me kind of taking a look at one of the guys I used to listen to, who I hadn't listened to in a long time, who's been talking about a housing market crash for the past 5 years approximately. And all I think is, how can he not be held liable for talking people out of buying a property the same way that if somebody talked somebody into a property and the market fell, they'd want all sorts of repercussions and find that to be a libelous act? I don't see it as any different. Going on and saying the market's going to crash, the market's going to crash, and causing people to make decisions that impact their well being, I think that's a mistake as well. Nobody knows what the markets are going to do. I just suggest saving for your future, whether that's in stocks or houses or whatever. And if you're in the right position to buy a house, don't let these guys on YouTube talk you into it or out of it, because they're just working on their channel, trying to get as many clicks as possible, trying to grow their business, so to speak. It doesn't mean they're right about the markets. And in the meantime, for the housing, at least here in Vegas, we're probably up 60, if not 70% from the time this guy talked about a crash, on top of rates dropping from, even if he was, while it was beginning to go higher and it was in the mid threes to mid fours, all the way up to like 7% interest. So if you've been listening to him or the other ones that I listen to who talk about this gloom and doom stuff, following their advice, you've missed out on opportunity on stocks, you've missed out on opportunity on collectibles, and you've missed out on opportunity in real estate. Generally, the saying is, time in the market is more important than timing the market. And I can't tell you how true that is. Or the markets climb a wall of worry. It's human nature to be fearful and worried. It goes back to the dinosaurs. It's all mammals, because it's our fight or flight, and it's a natural fear that comes to us for protection and survival and everything else. Well, these guys are feeding on that fear because it drives more views than saying everything's just fine, because that's not interesting. Try to fight that fear instinct and just work on saving. If all you do is live a small life, make more than what you spend, and put that money away, and you just keep doing that and doing that and doing that, you'll have good results. You'll have some ups and downs through the cycles of the economy, but if you just keep putting away and saving, you'll see it grow. And not only that, you'll start to see the savings start to grow where it starts outpacing what you're able to put into it. And that's an amazing thing. And hopefully by retirement, you can rely on some of that money coming in from the investments you made when you were younger to be able to help subsidize and pay the bills. Because I'll tell you, your body starts to hurt, you don't have the energy anymore, you won't have the drive the same way. So if you have something saved to help pay the bills so you can relax a bit and not have to push the way you did when you were in your 20s, I think you'll be really happy about that. And being a top investor and having the right savings is no different than being a top athlete, a top student, a top musician, or anything else. Don't fool yourself. These guys practice, practice, practice. Whether it's a sports, whether it's school, whether it's whatever it is that you're thinking of that people do really well at. If you want to do well at investing, it's not about the research, even though it is about the research. It's about the saving and putting away and staying disciplined and sticking with it. Anyway, if you could do me a favor, man, if you've made it this long, you floored me anyway. So thank you for that. By all means, make a comment in the comment section that I made it all the way to the end. I'll be shocked because I'm impressed when people make it further than 2 minutes in the video. But if you could hit that subscribe button if you haven't already, smash the like button, make a comment in the comment section. You have no idea how helpful that is for YouTube's algorithm. It helps other people find the video. I really appreciate it. I hope your week's going well. It was nice to see the stock market have a second day that it actually was up after yesterday. That's the first time in a while because it's had these like 1 day rallies and then collapse. But hopefully we see a little bit of a cushion and it starts to drift higher. I hope your week has gone well. I hope you're having a good Tuesday. And I'll likely talk to you in the next day or two if I don't talk to you tomorrow. Have a good one. Again, thumbs up, like, subscribe, and make some comments. Bye bye.